Hello, everyone. This is Blaine Markham, Chief Trading Strategist, coming to you with my weekly market update, breaking down for you what I'm seeing across the market. So let's go ahead and hop right into the charts here. And I'm recording this weekly market update on Thursday and coming off of a very tough day for markets. You can see here on the chart of the S&P 500, of course, a big down day. We actually had the index close down 1.74% on the day. So definitely a pretty nasty day on the street across the board for all the U.S. major indexes. And today's trading action really just confirms the recent pattern that we've seen across the indexes here in the US, really ever since the start of the war that has broken out in Iran. We've had markets really under pressure, a strong series of lower lows and lower highs starting to develop. Of course, last week we talked about how the S&P 500 had finally taken out its 200-day moving average. That was a very clear level of support below the market at that time. We're hoping to see that hold up. That's our green line we're looking at right here. You can see, of course, we cruised right through that last week. And ever since last week, when we broke through that on Thursday, we've been unable to recapture that level. In fact, we've actually tried to trade up to it on several occasions here just this week, and actually the rallies have fizzled out and failed once we got back up to that level. So now it appears that 200-day moving average has flipped from a key level of support to now a key level of overhead resistance above this market. You can see specifically in Thursday's trading session here, again, really tough day, finishing down over 1.7% on the day, closed at the exact lows of the session. This is a brand new 6-month low close. So over the past 6 months, today's closing price on Thursday is the lowest that the S&P 500 index has closed during that period of time. This is also notable too because you're keeping in mind key support levels. This is the second time we've actually cracked below this key support level, dating back to this little smaller sell-off that we had in November of last year. It's about a 5% pullback in the index. Well, we had taken that out last Friday when the market had really gotten oversold with the triple witching, really high volume day. We bounced back from there, had been holding that level earlier this week, and now yet again here on Thursday, we've cracked through that level and now closed below that level again, confirming that move to the downside. And if you look here, just the price action of the past, call it 6 weeks, you can see this very clear series of lower lows and lower highs that have started to develop here. And really ever since the beginning of this month, you can see there's almost a straight line right here that's sitting over top of the index, this very clear downward sloping trend line here that is serving as a very clear ceiling and almost like a lid over stock prices here at the moment. And until we're able to break through this downward sloping trend line, the technicals for this market are going to remain challenged. So given that we're continuing to see this pressure to the downside at the overall indexes, a lot of stocks are under pressure here. I do want to point out that the S&P 500 index is just a little more than 7% off of its all-time high. So certainly a pretty healthy pullback so far. We've passed through that 5% threshold. We're not quite to that 10% pullback threshold, but that's absolutely going to be a key level that we're watching. So given that the index recently, just back in January of earlier this year, the index had traded all the way up to 7,000, representing a 10% pullback from that level would put us all the way down to 6,300 S&P 500. So that's a key level that we're certainly watching for right here because that would represent a 10% correction in the markets. And in addition to that key level that we're also watching, we're also looking at this level right here, dating back to August of last year. We had this brief, short 2-day, really steep drop off in the markets right here. We finally found some support at this level here. That's just a touch lower, coming in about 62.50 on the S&P. So you can see that level there, just a touch below that 10% pullback. So somewhere right around in that range, I think, is where we're going to find some very significant support for this market. Given the price action here recently, I think there's a very good chance that certainly if we don't get a satisfactory resolution to the war in Iran and to the energy disruptions coming out of the Middle East, if we don't begin to start getting some positive news related to those events, I think we're very likely looking for a test to go down and test these levels that I just mentioned to you. Because even though the S&P 500 itself is only just a touch over 7% off its all-time highs, if you look under the surface of the market, there's been some significant trend deterioration. You're seeing very poor breadth across the board. Not very many stocks are still in confirmed uptrends. And in fact, still looking at the market internals here on Thursday while I'm recording this video, of the entirety of all the S&P 500 stocks, so that entire group of 500 stocks, nearly 60% of all those stocks are 20% or more below their all-time highs. So that really gives you a good picture about the type of carnage that has occurred under the surface of this market. But with that said, we are still continuing to spot some great opportunities out there in the market, both to the upside and the small pockets of the market that do remain in those strong bullish uptrends, but also some great opportunities to the downside, continuing to find some great bearish opportunities amid this slump here in markets. So I want to go ahead and point out to you next where we're continuing to find some really great opportunities here in this market. And this chart right here is going to kind of help illustrate the picture. So what we're looking at right here, this chart is illustrating with the two lines right here, the year-to-date performance of both the S&P 500 index and also the XLE or Energy Select Sector ETF. So of course we can see our black line down here. This is just charting out the year-to-date performance expressed as a percentage of the S&P 500 index. And of course with our blue line here, you can see this really strong trend here for XLE. That's showing you the performance year-to-date of the energy sector. Of course, you can see there's quite a bit of dispersion here between the performance between the index and just the energy sector. The energy sector itself has by far been the strongest performing sector here to year to date. It was performing very well even before war broke out in Iran. And ever since that has occurred, it's only really turbocharged this sector's move to the upside. So you can see at the time that I'm recording this video here, the XLE is currently up 38.5% year to date. This is absolutely incredible return thus far. Now you contrast that with the return of the overall index, you can see it was pretty muted for much of the beginning of the year. The return was, pretty much flat to even marginally higher at different times. But of course, really ever since the war kicked off, you can see the returns have started to turn negative, with the S&P now down a little bit more than 5% here year to date. So what this really does help to do is illustrate the relative strength that has been displayed by the energy sector thus far this year. So because of this, we always like to target the pockets of the market that are displaying that strongest relative strength or even relative weakness to identify our top bullish and bearish setups in the market. So we've been watching the energy sector very closely, trying to pick through all the different stocks, find our favorite ways to play this breakout here in energy. And I'm going to go ahead and share with you next one of our favorite ways that we found to play it here recently. And it's with this chart right here. So you can see this is for PSX, this is Phillips 66, and this is one of the major US oil refiners. And again, this is a very powerful trend that we had been watching for much of last year. Really through Q4, we started to see a very powerful trend develop for PSX. There was a brief sell-off there in the back half of December, but the stock very quickly recovered and then started pushing back up to new higher highs and higher lows in very short order. We got a brand new trend confirmation buy signal right here just to begin the year. So you can see our 21-day EMA crossing above our 63-day EMA there. So kicking off a great trend line buy signal, and the stock has been trading above both those EMAs ever since. So very strong price action here for PSX. And of course, you can see the move here in PSX shares really ever since the war kicked off. It began right around these dates, and the stock has just zoomed higher on the back of the energy disruptions that have been occurring as a result of the war. So the technicals look absolutely fantastic for this setup here. And again, this is one that we had identified pretty early on that was going to be one of our favorite ways to play this great run up in energy stocks we've seen here so far this year. And actually in our CCT trade alert service, we had actually sent out several trade alerts to our members specifically for PSX, and they have been working out quite nicely. So we'd actually initiated the initial position roughly back in this date right here, right before this major leg higher here in PSX stock. So of course that initial trade alert worked out quite well, but since then we've had a chance to close that one out, take some profits, but also we still have some exposure remaining to that trade. We've actually taken that and rolled it over into a new trade opportunity that we did roughly in this range here. I believe it was this bar right here where we had a bit of a pullback here in the broader text of this uptrend here for PSX. So it grabs a great opportunity to go ahead and roll this over, roll those profits into a new trade. You can see again shortly thereafter, PSX continued this powerful move higher, pushing up to new all-time highs on several different occasions since then. So for those contracts that we're still continuing to maintain exposure to in our trade alert service, that trade alert is continuing to perform quite well. And as of recording this video here, after the market closed on Thursday, that trade alert that we sent out to our members for PSX is currently sitting on an open trade profit opportunity of over 308%. And again, I want to stress to you, please keep in mind that this trade alert has been open for less than a month, only just a few weeks. So this trade alert has been able to produce a great open profit opportunity in just a few short weeks' time. So I certainly hope that you have been able to follow along with that trade alert and benefit from this great move higher in PSX. But if you have not, that's totally okay. I'm going to go ahead and share with you right now how you can make sure that you begin receiving these trade alerts just like the one I shared with you here for PSX. So if you want to begin receiving these trade alerts just like the one I share with you, this is how you can do it right here. Go ahead and dial up our team. Give them a call at 310-647-5664. Please go ahead and call up the team. They're a great team. Please feel free to ask them any questions you want to about the strategy, about the trade alert service, any questions you might have about the program, because they're there to help you. They're a great team. And most importantly, they can make sure to get you signed up so you get on the list to begin receiving these trade alerts just like the one I shared with you here today. So go ahead, give them a call. Now, this just about concludes my weekly market update for this week. A couple of key things that I'm continuing to keep a close eye on here over the coming week. Myself and the team are certainly going to continue to be watching the technicals across the market very, very closely. As I mentioned earlier, and you saw earlier in this market update, the market really is at a key pivot level right now. We've just dropped below through some key support levels. And if we continue to confirm to the downside of those levels, I think we certainly are going to have some further to go to the downside here. So we're going to be watching the charts and the technicals very closely for any brand new potential signs and signals. And also, just like everybody else, we're certainly going to be keeping a very close eye on the headlines that are coming out of the Middle East. This is the headline-driven market right now. We really don't have a major catalyst when it comes to the Fed right now. We're still a ways out from major earnings reports. Really don't have a macroeconomic report for at least another week that could be a major market catalyst for stock prices. So right now, the market's still captive to every single headline that's coming out related to the war, related to energy prices. And so we're going to be watching these developments very closely because they're certainly what is driving markets right now. And it's impossible to say how or when or what it's going to look like when this war ends, but we're going to be keeping a very close eye on these developments as they come out. So this wraps up my weekly market update for this week. I truly hope you enjoyed watching this video here. Thank you so much for tuning in. I really appreciate you taking the time to watch this weekly market update. I'll be putting this together for you next week, and there's certainly bound to be some major market moving catalysts between now and then. But until then, hope you have a great rest of your week and weekend, and I'll see you back here soon.